Well, we got the CPI report and we learned that things are getting more expensive. I'm going to cover some recent news headlines that underscore this issue. Housing market is stuck. Americans can't afford homes. Investors aren't buying property, and economists see little relief ahead. Low inventory, high rates, and high prices. Over at the New York Post, they said credit card and car loan defaults hit a 10-year high as inflation squeezes families. This has not been seen since the financial crisis. And the struggle to pay bills is poised to get worse as interest rates rise and rise and rise, and the moratorium on student loans expires. Forbes said that people are strapped for cash. More Americans are making early withdrawals from their retirement savings. Folks getting 401k distributions surged 36% year over year in Q2. Washington has reported that the government spending deficit will exceed $2 trillion. So to put that into perspective, our spending deficit will exceed the total GDP of every country in the world except for the top 10. This is a direct result of the political ruling class, their excessive spending, and today we got the CPI number to prove it. Inflation had decreased for 12 straight months, and that's what gave us the massive run-up in big tech stocks that we've enjoyed for the first half of this year. However, this is the second month in a row that it has ticked back up. Some analysts are saying that it was in line, but it wasn't. Analyst consensus expectations was 3.6, and it came in at a hot 3.7. Does this mean that inflation is reversing course? Well, we know that oil has risen 30% in the last 2 months, which is only going to serve to further aggravate inflation costs. Your government is taxing, borrowing, and spending more money than the richest country in the world, can produce, and it's causing your money to crash. That's why the cost of goods is climbing faster than the Fed's target rate of 2%. Now, I've shared the problem here repeatedly over the last couple of weeks that 97% of all investors don't believe that the Fed is going to continue to raise rates in 2023, despite the fact that we see inflation ticking up. The news did cause the Fed funds rate futures for November to actually go up from 40% expectation to a 55% rate hike in November, yet September, the expectation is still no hike.
You sure about that? You sure about that? You sure about that?
Well, we shall see. Next Tuesday, the FOMC meeting, and then Wednesday, we've got the Fed rate hike decision, and then we're going to see how the markets respond. Tonight, myself and the Stock Squad, aka the Core 4, we are going live on StockMo's page at 7 p.m. Eastern Time, and we're going to be reacting to the CPI report some more. Now, guys, you better start growing your wealth. A 36% surge in 401k distributions. These people out there are eating their seed when they need to be sowing it and investing it. But not you guys, because you're here. This is the Stocks with Josh show, and we're not eating our seed. We're investing it on this show each and every day. Thank you guys for joining me. Say hi, throw a heart in the comments. Stop what you're doing. Hit subscribe to get daily videos on how to combat and fight this inflation through long-term investing. All right, I'm going to do a quick review of my top trades in the S&P 500. We see that largely the market is mixed today. Big tech, slightly green. In my Patreon, I did an alert last night notifying my plan of entering puts on Eli Lilly on any form of a pop-up. In a nutshell, it's overbought on the MACD and the RSI, and its upward move is kind of cooling off. It's failed to close above the resistance of 601.90, and that was the line in the sand for a further move up. And now it's pulling back a little bit. There is a lot of room for this to come down and to touch the top of the 50 MA and still be in a bullish trend. So I'm not shorting. I have some puts. They're profitable today. I'm going to be looking to add more on any push up right now on Eli Lilly. Apple is gray. Most of big tech is barely up 1%, with the exception being Amazon and Oracle getting a bounce off of its largest one-day drop in decades. I want to cover some news on Oracle. Oracle stock dropped 13% on weak guidance, which logged its worst day in 21 years. Yesterday, they were the first place stock market loser on underweight earnings and bad forward guidance. They lost $40 billion in market cap, and today we're getting a recovery pop. The question is, will it stick? Well, we've got some bullish news from Bernstein, which raised their price target on Oracle to $144 from $142, maintaining their outperform rating. So who's right, Bernstein or the falling price? Well, today I'm going to cover what I see in the charts on Oracle, and I'm going to give you guys a quick update on Amazon. Before I do that, let me take a quick station break for the Moomoo investment app. If you are in the US, Australia, or Canada, there's an offer for you. All you got to do is click on the top pinned comment to get all of the details for your country. Right now, in the United States, they're offering up to 16 free stock as well as a $50 cash bonus for opening and funding an account. These guys have better trade tools than a lot of the other retail platforms. I use it every day for their news, their stock screener, their 8 conditional order types, and their great earnings calendar, as well as a free chat group that I host on the app. I call it Stock Josh Fam. Get your free stock, get your cash, start trading with better trade tools, and then come find that chat group. And then I want to quickly shout out the Patreon that I started over the last month, and you're getting trade alerts from myself, Stockmo, Keenan, and Stock Up with Larry Jones. Well, what can you expect from this Patreon? Well, more details and more charts and more heads up on my daily trades. That's what I'm doing over there. Guys, let me know in the comment section if you're enjoying the Patreon and if you've made any money. I always love to hear that. It motivates me. If you want to join that, there is also a link in the top pinned comment and the description of this video where it'll take you right over to the Patreon and you can join the Discord. All right, I want to start off with the Oracle trade. I'm going to give you guys 3 observations and a conclusion. Number 1 observation, if you're looking at the daily chart, over the year-long period, one of the first things that I noticed is that this has got wide price swings. We see that it went from a $60 low in October of 2022 to a $127 recent high. An absolute incredible move. And before that, in 2020, it went from a $40 low all the way to a $106 high in 2021. So the conclusion on that is that this is a profitable stock to trade or invest in, as it has moved up twice in just the last handful of years, over 100%. Man, that's a winner. So this is absolutely one to keep your eyes on, but you want to get it at the right price. Number 2 observation, Oracle got a bearish double top as well as a confirmation of that double top when it broke below the center of the valley. So let me do another brief explanation of what a double top is. It's an extremely bearish pattern when it appears on the top of a run. Now we've had a nice run up, like I just said, 100% up since October of 2022, and then we got 2 peaks that created a double top. Now the way that that gets confirmed bearish is if it breaks beneath the lowest spot between those 2 peaks, which it did. It broke beneath that the other day when it fell beneath $111, which means that we have a confirmed bearish trend developing in this stock. And it will go lower. But the big question is how low? Okay, let's dive deeper into the charts. My number 3 observation is that long-term support is right now sitting at $97 to $95. I'm going to call that used to be historic resistance, now turns support from the last all-time high. And that's the way it works, and that's what I'm going to be watching for. When it gets there, that's going to be the zone that I'm going to be accumulating for a long-term hold. Now, here's your number 1 problem that you're going to face. It's the patience. This is a good stock. It's been running up. It's been profitable. People want to hold on to it. But we got that double top pattern. So for a technical trader, it's time to let it go. Let it come back. Like Warren Buffett says, the stock market is a vehicle to transfer money from impatient hands to patient hands. And that's what we're going to do with Oracle at the right price. Now, as I'm accumulating between $97 and $95, I want you guys to be aware that it could, in a certain bad macro event, which we know will be ahead of us, it could get as low as $88. And in my mind, that's where I would do some lump sum investing if we ever got down there. Okay, but what is the specific plan? Is there a swing trade plan? Should I be entering puts on the way down? Josh, what do we do? Well, for one, this is not financial advice. I'm sharing with you my game plan, and I'm going to break it down for you guys. We absolutely will continue to go up. Matter of fact, while I'm shooting this video, we might pull up a little higher. We're going to back test at bare minimum $114.30. That's the way it works. When it breaks through a level, it's going to turn back to that level and attempt to back test it and break back up above it, but very likely it could fail. Now, I'm not going to say specifically that it'll fail at 114 because we may have just entered into a confirmed decline that will be preceded by a distribution period. It's going to vacillate hard to the downside and then hard back up to the upside. And so the area where I'm going to be looking to enter into puts and the area where I'm going to be looking for a reversal trend confirmation is between $114 on $114 and then above that at $120. So how it gets rejected and what type of candles form between the 114 and the 120 range is going to signal me to enter my puts. Now I'm going to break this down some more. I'm going to share my charts that I just showed you guys as well as some others, the MACD, the RSI, and some other indicators. I'm going to break that down into a more complete thought in the Patreon later today or tomorrow. But we got time on this. I always bring the trades to you guys early before I even get into them I'm giving you guys my trade setups. Let me know in the comments if you think I'm crazy to be looking at shorting Oracle, if you think it's going to be going into a new heyday and blast all the way up to $200. I'd love to hear from you guys your thoughts on Oracle. This is what I'm thinking about Oracle, and this is what I'm going to be watching. It could change. This is the game plan for now. All right, let's recap on Amazon. Now, you guys know this has been a hot stock and it's been moving. The very last time that I showed you this chart, I drew it out for you guys, that when Amazon was at $138, I said that we would shoot up above 140 and that we would even hit as high as 142 and that we would get some selling pressure and then we would back test 140 and that 140 would be the last place to possibly enter to push higher and go long. And guys, if you look at this chart, you can see that that's exactly what happened. We shot up to 142, got rejected, came back to around the 140 range. That was the last opportunity to buy, and now it's shot up all the way to $144. And as I said in my previous video, I believe it's going to get to 146 and even as high as 150. But I don't think it's going to all get there in one day. So let me break down this trade a little bit more for you guys, as well as my view on Amazon for a long-term investment. I'm going to give them both to you guys because Amazon, I told you guys, when I recently compared Amazon and Google to the rest of the Magnificent Seven, I gave it an A rating because out of those two, they're the ones that came down the least during this correction environment. You want to pay attention to stocks that fall the least in the middle of a correction. We know that Apple, which is a beloved stock, it's actually been under some pressure, not doing great today. It fell over 13%. We saw that Tesla fell 30%. But both Amazon and Google barely fell 5 and 8% respectively. So that was our signal that we would be up back at our tops. And right now we're sitting not at our lows, we're sitting higher than we previously had been before this correction began. That's amazing performance for this stock. And Google's done the exact same thing. It's also sitting higher right now than its previous local high that it had set in August, which is really good. Right now, $144.30 is very strong resistance for Amazon. And so for me, it's actually a take profit zone with a tight stop loss, which means I'm not going to sell my position, but I'm going to raise my stop loss super tight. I'll probably get kicked out, probably around 143, maybe even 143.50. Now, here's another concern. We're up against resistance, and you know how I watch that volume. Today, we went up 2% on a 9% decrease in volume, which means that the upward move quickly lost momentum. And you might say, well, Josh, I thought this was going to 146, 150. How in the world are you thinking of taking profit when it's barely gotten up to 144? Guys, we follow the charts. Support below is at $136.75. And I cannot predict the future. I do not have a crystal ball. But if Amazon continues to show superior relative strength, and we have some market volatility between now and next week. Let's say the Fed comes out and raises the rate, which nobody's expecting next week. It absolutely would slap Amazon down with everything else. And where do I think Amazon would go? I think it would go to support at $136.75. And that's where I would consider buying again. And off of that bounce, I think we might go up to 146 and then possibly even into a higher push of 150. Now, if it were to squeeze above resistance today and possibly hit 145, 146, I'd be looking for a rejection candle off of that move because I don't think it can be sustained just yet. And then if you understand how you enter and exit on a daily time frame swing trade, you know that it's going to likely come back and push beneath 144.30, and that would be another signal and another confirmation that we're not going higher right now. Never FOMO into a play. Amazon is a buy for a long-term investment in my portfolio, but the only place that I would be accumulating Amazon in my long-term investment portfolio is in the 130s. Just keep that in mind. All right, guys, that's it. I wanted to get this video out today. I'm really looking forward to the live that I'm doing with the Stock Squad, Keenan Grace, Stock Up with Larry Jones, and Stockmo. We're going to be reacting to the inflation data today, as well as some other hot stocks, and introduce some details to you guys about our plans for the Patreon. It's going to be a great show. It's going to be at 7 p.m. Eastern Time, 6 p.m. Central, and 4 p.m. West Coast Time. I hope you guys will join me for that. As I said, I'm going to load up the Patreon tonight with some more details from the Oracle and the Amazon trade that I just gave you guys. Guys, if you enjoyed this show, show me the love, hit the like for me, and get the next video by hitting the subscribe and the YouTube all notification bell. Appreciate each and every one of you. I appreciate all the kind comments that I got yesterday regarding the allergies that I was facing. I just want to tell you guys I love you. Thank you so much for encouraging me and all the comments that I receive. Until the next video, peace and blessings. Take care.